Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you've all had a great Thursday so far. This is going to be your daily cryptocurrency market update, and we've got some really interesting things to share with you. Over the past 24 hours, Bitcoin has been in a range of about $105. It's doing absolutely nothing. Even when we saw the dollar see weakness yesterday, it didn't really translate over to the cryptocurrency market. I think that's because it's got this kind of tombstone of a stock market around its neck. So I want to do a few things in this video. We're going to go over the short term for Bitcoin, look at the hourly chart. There is still the possibility that this rally from sort of 15,600 continues. And we are going into the CPI print on Tuesday, which may have some positive connotations. Certainly, if inflation is deemed to be coming lower, it may mean that markets may start pricing in sort of less aggressive interest rate hikes. But I want to, and that's the sort of macro situation, I want to talk about risk. And I want to look at Bitcoin open interest, which as of the 5th of December, saw a huge sort of drop in open interest. So what is Bitcoin open interest, first of all? Well, what is open interest full stop? Open interest tracks the amount of contracts that are currently open, so positions that are placed on an asset. In this case, it's Bitcoin. So when open interest is going up, that means there's more and more contracts, whether they're long or short, they get branded together. Being open, and you know, it's one way you can look at trends. If a trend is down, and we've done this in relation to the bear market that we're currently in, you know, you saw a huge dumping on open interest here, and then you see a real sort of trending up in open interest with a downtrending market. That shows that the bear market is very much intact. But recently, and we're going to link this to a few things. We're going to look at Ethereum open interest. It's also went through the same thing. We're going to look at the WTI futures contract spread is negative. Open interest is collapsing. The market sniper actually tagged him in this, gave some thoughts in regards to insiders running, pricing in well-signaled demand destruction events that is pre-planned and orchestrated, de-risk everything. So we're not just seeing this in the oil futures market, we're seeing this across the board. You know, when we see this drop in Bitcoin open interest, it means that people are dumping positions. Now, the logical explanation for this would be going into the CPI print. People don't want to hold because it's very hard to position with any sort of a tight risk management, because often it looks like a heart monitor. You know, you get this sort of up-down motion. But it's not just in Bitcoin and Ethereum that this is the case. On Monday, and I did a video that I released an hour prior to this one, looking at the stock market specifically, we looked at the fact that Mike Wilson was also telling people to essentially get out of their longs, that he could see potentially a little bit of an extension of this rally. But ultimately, you know, and we've likened trying to trade the cryptocurrency market, which was, you just wanted to bang your head on a wall yesterday watching that price action. You know, we've always likened longing the crypto space right now to playing Russian roulette. You know the gun is loaded. You know the market's going lower. You're just hoping that you can get a few squeezes off before blowing your brains out, or your account, I should probably use as more of an accurate analogy. So this is concerning. You know, is there anything to be taken from overlaying Bitcoin here? Potentially. I think I've already got it overlaid, actually. You know, you have open interest sort of falling in this kind of a sharp manner, as often, you know, you might get this open interest fall and then a climb, and the direction that if this open interest climbs that Bitcoin takes is going to be very telling. But this looks more like people de-risking. You're seeing this in the oil market. The market sniper had tweeted pricing in incoming demand destruction event, tagged oil. I then looked at this posted from Alicio, looking at the WTI oil contracts and how it's, you know, basically back to where it was in March 2020. This is pure capitulation from an open interest situation, and maybe, you know, there may become a buying opportunity actually in January here. And essentially linking this to the fact that insiders running pricing in a well-signaled demand destructive event. And this is essentially all linking back to the yield curve, which we spoke about. And we think that there's reason for markets to go down, especially crypto, in a restrictive environment that we're in set by monetary policy. We've done so much analysis on this. But actually, there's reason to be genuinely concerned about the sort of economic landscape of everything. And a capitulation crash-like event, which the yield curve is essentially predicting. Look how steep this yield curve is, guys. You can't help but look at this and go, well, it must be predicting the end of civilization itself, which is a joke. I don't think that's going to happen whatsoever, by the way, guys. Humans are going to be here for years and years and years. Getting on a bit of a tangent there, but you know, it's predicting something pretty bad's coming down the road, and it's accurately got 100% hit rate on predicting every single crash that there is. Last one was going into March 2020's lockdowns. Then we had 2008 financial crisis, the dot-com boom and bust, the crash of 1989, and this one is going to be a crash. And right now, we're just waiting for that crash to reveal itself in terms of that Lehman's moment to take place. You know, is it going to be? My best guess, and we spoke about this, is the fact that you're going to see mass defaults in regards to the debt market, which is going to call into question the currency market itself and the entire financial system. You know, we looked at the Bank of International Settlements statement. It just didn't strike me with any kind of surprise, I guess, but it was shocking just at the actual sheer numbers of unaccounted for dollar-denominated debt that comes to sort of a fruition, a lot of it next year. So it may cause, you know, it's why we think the dollar's going higher. So open interest is kind of telling, you know, are we seeing a mass de-risking here? You know, we looked at Ethereum, for example, and let's actually overlay ETH. We will use Coinbase, that's plenty. You know, are we seeing, we haven't really seen a fallout from this de-risking. But is that potentially to come? I mean, we saw this, and then we saw the spill. You know, we've seen this. Is there this delayed response to, and then we get this next leg low? I think the next leg low is actually imminent. That's going to bring us on to our Bitcoin analysis that we do every single day for you guys. You know, we said we had a bullish div here. You had a bullish div over leading into March 2020, and we're essentially calling for a very similar setup to take place. Not sure why I've got the love heart signal on here. But this is kind of, you know, this is still something to be taken seriously. My question is, and I've been trying to long this market really for the past week or so, just doesn't feel right. Nothing feels right about longing this here. Even though there is absolutely still, you know, this was the FTX capitulation, and there is still the possibility, let's drop down to the hourly and do a little bit more in-depth technicals. There is still the possibility of a further continuation in this run. The dollar has a little bit of a weaker day, although it had a weak day yesterday, and Bitcoin did. Bitcoin literally stayed for the entire day, if you exclude wicks, in a range of about $105. Pathetic. I mean, it's not worth trading it. It's not worth the screen time, you know, in regards to trying to capture anything from that. Unless you're some sort of micro weirdo, you're after 0.05% every trade, then, you know, good luck to you. But that's not really the game that I try and play. You know, I want bigger moves and more volatility, which we're just not getting. So we have said that, you know, chopping things up, you're climbing up the ladder and you're still sort of holding it right now, but you're holding the underside of it. So the real things to watch for today, even though we do see potentially an extension to 18K, we've said, look, you could be coming back to 1950. You know, and there's obviously a level in here, which would be significant. These are levels that we're sort of looking at moving forwards. And the play is really very simple. Okay, so we've held support, held support, held support. Now you're actually under the underside of what was previously holding you as support. If you do something like this and you keep failing it, you're coming down to these levels here. And then it's going to be telling what you do, whether you reassert or whether you then bark down low. And once you take this one out, I think the sort of trapdoor is then going to be opened. But I kind of feel like actually Bitcoin's next leg, even though it may drift lower, it's going to have rather a capitulatory leg lower based on things happening in other markets like the S&P and so on and so forth. The alternative play to that on the short term is you come up and you hold this. You're then looking for upside to here. And then see what happens. You, like I say, you come back below, you bang your head, you're coming down, or you come back below, you sort of hold it, look for continuation in what is a short-term trend. But pay attention to macro markets, pay attention to the dollar, which is likely to reassert. We did a video that's well worth watching on the S&P earlier, guys. where we're essentially looking at, you know, it can't really be this simple, but maybe it is. This also ties up with the whole de-risking. Maybe, you know, this is it for this relief rally. The only thing that I would say is you do usually get a bounce around your 30 EMA where you currently are. So there may be a bit of a bounce. Maybe this is the Santa rally, and then we go into further downside for the S&P. And also this is going to drag the cryptocurrency market with it. So there's a lot to unpack in from this video. It does look very much like players are de-risking. We're seeing this in Bitcoin open interest. We're also seeing it in Ethereum open interest. You know, could we be looking at that next leg lower a lot more imminently? You know, and then potentially this could be caused by some sort of capitulation event going into next year. I don't see how this ends well at all, in my opinion. And I would ultimately like to be out of markets. And, you know, we're dollar heavy, very dollar heavy. We've been dollar heavy since 44K. And we're going to continue to be that and try and trade this market to the best of our ability until it's time to reinvest. All I've got for you in this video, guys. You enjoyed the content, like us, would appreciate it. So as a comment, and I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching. Have a wonderful Thursday.